Hello, everybody. Welcome back to another edition of Uncle Charles's unbiased price action analysis. It is the worst price action analysis on YouTube. Bah! And let me tell you something, guys. Although we've hit some new highs, some historical stuff. A lot of historical events have been happening a lot lately, if you know what I mean. But keeping it on the price action in the charts, it looked like SPY is possibly back in the chop phase. Okay, I'm not happy about this, but we have to remember the chop phase is necessary. Okay, from trend phase to chop phase, from chop phase to trend phase. That is the market cycle. Okay, now the thing about the chop phase is it's complicated. What is the point of it? The market makers use it. It's like they use it to build strength. Okay, it's like reloading for them, if you will. Okay, they make a trend move, and I mean, if they keep pushing it up, eventually it gets predictable. They can't just push it one direction because then retail traders could pick up on it and they start making money. And market makers don't want retail traders making money, so they gotta complicate things, right? Once people start FOMOing, that's when they complicate things. Enter the chop phase or they pull back. Thing about the chop phase, not only is it complicating, it also comes in different forms. And we never know how long it truly lasts. As you guys can see, the last few examples, we had a channel, we had a flag, we had a big triangle. Bears like these ones. These are the chop phases that bears like, when it gives you a nice correction. Okay. So the point is, they come in different shapes and sizes, different patterns. And look, you guys see the three candles side by side. That's a sign that the chop phase is back, when you're getting candles that are closing side by side like this. Okay? So now it's our job to be patient. Be patient and let the market do its thing. Let it run its course until the next big move, until the next big event. And until then, we have to identify the range. Okay, we have to identify the range, and we want to trade it unbiasedly. So as you guys know, I had that critical level of 555.36.3-ish. And then there's that macro level, fib level at 561.5-ish. However, if we look on a smaller time frame, we'll see some other stuff too. So this blue line is my 555.36 level. You see, this happened in pre-market. This is an 8:30 15-minute candle. I think we had PPI dropped around that time. And look how sneaky the market makers are. They bounced it right off of Uncle's support level. Bounced, and it just went up from there. But look what we formed. We look like a cup. Double top around 563.5. So we know the sell zone. We know the buy zone. So with that being said, that is my chop range. 555.3 to 563.5. It's a decent sized range. And we have levels in between. From where it closed, 560 and 561.5 are resistant, and supports at 558.5 and 557. But overall chop range is 555.3 to 563.5 until proven otherwise. You guys can also see, looks like a cup. Bears will look at this chart and say, oh, double top. We're bearish. That's what bear bias traders will see. Bulls will see this cup and handle and they'll say, oh yeah, we're going up. Okay, but we are sheeps. We are unbiased. So when we look at this, when the sheeps look at this, we see, look, more opportunities. Anyways, gotta let the opportunities play out though. We clear 560, 561.5. That should put the top of the range at 563.5 in play. Another test. Will it be a triple top or will we break out? That is the question. But either way, we look to long of those levels clear, play it level to level. And if you want to gamble, which I don't recommend gambling, but if you want to do that, do it with your runners. And if to be bearish, 558.5 needs to fail to put 557 and 555.3 in play. Now, if we're talking swing tradable move, I tell you, the longer we base, the longer we chop, the bigger the move. Okay, so you want the trend phase to come back, but at the same time, you don't want it to come back too soon, because then the move will either be a false one or it will be a small one. Okay, we want the real big ones.
Well, this escalated quickly.
That really got out of hand fast.
That didn't sound right, but hey, y'all know what I mean. Anyways, top range 555.3 to 563.5. Anything in between, we should play a level to level or scalp it. Okay, stay neutral. And then once we break that range, I favor we get in a bigger move. Above 563.5, guys, new all-time highs. Look what happened the last time we broke the range, the top range. We went to new all-time highs and some. Market might be consolidating to build strength to try to give us another new all-time high. All right, but if it's pullback time, then those support levels need to fail, especially 555.3. Obviously, you can see that candle. Even those in the pre-market, the market makers clearly recognizes that fib level. Okay, it's not because it's a fib level from Uncle Charles, obviously, but that's the level I identified, and the market makers apparently agreed. And if we break down that level, then I would be bearish at least down to 550 because that was the last big breakout we had for the chart range. All right, and below 550, obviously, would be bearish. Okay, I would definitely favor a deeper pullback. All right, guys, we understand the plan. We gotta try to keep it as simple as we can because the market makers, they're not gonna try to keep it simple for us. They're gonna complicate it, but we gotta simplify the process. Okay, remember trend phase, chop phase, possible chop phase. I gave you guys the range. So now that we're in the chop phase, you gotta be, size down if you want, or size up. It depends on your style because the moves might not be as big, and it could be trappier. So someone will hear that and say, well, if the moves aren't gonna be as big, I'm gonna size up to make up for it. You know what I mean? And other people will hear it and say, well, if the moves aren't gonna be as big and they're gonna be trappy, I'm gonna size down and just scalp to avoid getting trapped and have to settle for smaller profit. It's up to you how you guys want to approach it. My recommendation is level to level, unbiasedly trading it. That's my recommendation. Triple Q, big sell-off last Thursday, and then it looked like a relief bounce on Friday. I would have been a little more bullish had we not get that big old wick towards the end of the day. So still a little neutral here, but I tell you, it could be a continuation downwards. But if there is, it doesn't matter what uncles say or what anybody say. It matters what the price action says. And the way the price action is gonna communicate to us that it's bearish is if it breaks down support. Starting with 493.3, 491.8, and 490. Especially below 490, I would favor a deeper pullback down to 486.8 or lower. All right? Just listen to the price action. But if we clear 495 and clear 497, then the price action is saying back to 500 we go. Above 500, that will put 504, 505.5, and possibly new all-time highs in play, guys. Level to level. Woo! Now look at here, Tesla. I tell you, look, we cleared this fib level. I had a fib level here, around 238-ish. Went and smashed the next fib level, pulled back and went back down to retest the previous fib level. I gotta love fib levels. But is this a dead cat bounce? Or, is it just a relief bounce? Well, it closed around 248-ish, okay, which makes support, I got a lot of support, goodness, 247, 245. No, not 245.5, 244, 242, 240, and then 238. Okay. Now, for me to favor a deeper pullback, I do have this trend line here, this blue trend line. It didn't quite back test it as a support. It would be healthy if it does, but for it to be possible, got to break down those support levels that I mentioned, especially 238, which is like $10 away. But hey, we break down 247, 245.5, and so on. We could possibly go test that level 238, and below that, I would favor a pullback all the way back down to 223. That would be a big move. Tesla is a volatile stock. All right. Now, if this is more than just a relief rally and is really bouncing for real, then it needs to clear 248.5, 250, and 252. Friday's high was around 251.8ish, but I'm still watch 252. If it does, bullish. We're heading up a lot higher, 255, possibly all the way back up to 260. Definitely a possible. 265 wouldn't be out the question either. Look to react unbiasedly, up or down, doesn't matter. NVDA here. Okay, look, it's looking like it's trying to form that lower high. And if it is a lower high, that is bearish, okay? Now, this relief bounce we had on Friday, it wasn't very convincing. But hey, you never know. We want to stay open. I tell you this. We cleared that fib level at 132, hit the next fib level. But when we went back to retest 132 as a support, it failed. Okay, 132 failed as support. But you want to know what it didn't fail as? It didn't fail as resistant because when we broke down 132 on Thursday, on Friday, we got very close to testing that area as resistant, and there was selling pressure. There was selling pressure, chat. So it failed as support, but it didn't fail as resistance. So what bulls need to see is 132 recapturing. If 132 recapturing, then this might not be a lower high. It could be bullish above 132, 134, 136 in play. And above 136, I would be bull bias favoring 140 plus. Now, if this is truly a lower high, then support needs to fail. Stay below 132. 132 did its thing as resistant. That's bearish. But there needs to be follow through. Breaking down 129.4. 128 needs to break down. And especially 126.7 needs to break down. That was the last trap move we had. A bullish trap move. So breaking down that level would definitely cancel that bullish trap move. And I would favor more downside. Okay, that's my analysis for NVDA. All right, so let's get to the dark pool levels. Okay, so based on Friday, 559.61 was the biggest activity where the big money parked their money. Was it over billions? Yeah, it was over billions this time. Uncle has a 560 level, so it's not off. I like it when they match my levels, but this time it didn't. Let's look at triple Q. Okay, 491.8 was where most of the activity was for triple Q. Add that level to your chart. Tesla, 248.23. That's where most of 81% of activity. That's a lot. That's a lot. And NVDA, 129.24. So I have a fib level 129.4. But big money's parking it around 129.24. So definitely add that as a pivot level for your charts. All right, guys. Let's take a look at the flows, if it's bullish or bearish. What is the sentiment? And for 100K premiums or above, and it is bearish. Does triple Q agree? Yes, triple Q agree. Uh-oh. Tesla's bullish and NVDA is probably bullish. It's bullish as well. All right. Thank you guys so much for watching. And remember, keep it unbiased. Bye.